Hello, hello. Good morning. Happy Wednesday. Oh, yes, folks. It is your favorite time of the day, favorite time of the week. Small biz talk. Boo, 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 boo. Yeah, I'm a little enthusiastic. That coffee, let me tell you, Lori, I've been had a good start to the day. Well, on
Oh,
that
man,
note,
please do that every week. That was too good, wasn't it, guys? That was too good. Okay, keep
too
going,
good.
Sadie.
Well, Lori, if this is folks' first time joining us, hello. My name is Sadie Reben. I'm the media producer for the Los Angeles Regional SBDC. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. The LA SBDC offers no-cost services through funding provided by the U.S. Small Business Administration, SBA, and from the California Office of the Small Business Advocate. It's your tax dollars at work. The Los Angeles Regional SBDC network operates 7 service locations throughout Los Angeles, Santa Barbara, and Ventura counties. Our services are also offered virtually. We are here to help. We empower small business owners by offering tailored solutions through personalized one-on-one business advising, cutting-edge workshops, and comprehensive programs, all provided at no cost. We are dedicated to supporting your entrepreneurial journey every step of the way. Lori, it is our time. It is Wednesday. Woo woo!
I know. It's like the highlight of my week. I love that intro, Sadie. You're just getting so good at it. Welcome, everybody. I feel like it's officially summer. Is it officially summer yet, Sadie? Like on the calendar and everybody, is it like officially summer or is it not?
I think it's like those things of like officially, it's like
Oh,
those summer
Brenda, June
solstice.
21st.
Oh,
Okay.
thank you,
I'm
Brenda.
announcing. Yeah, there you go. I am announcing summer's around the corner. I didn't know if I'm announcing it's in there or what. I don't even know what year it is half the time. But anyway, it feels like summertime is upon us. So let's get going. We got a great show. We're going to be talking about so much as always. So let's go ahead and get started. So let's see what I managed to update and what I didn't. Oh, we have a ton of cool things happening in June. So June 10th, we got all new people, guys. June 10th, Patrick Murray is coming on and he owns Francie Franks. This has been featured in the news. It is awesome to have him come on, talk about all his experiences, all the things that's happening with the company. Real glad to have him on. Then the following week, someone new again, Renee Ware. She owns South Bay Women Gym and Day Spa. And I haven't met her yet, but I can already tell this is going to be about growing a business. She's been very successful with her company. We're going to learn a lot, but I can tell already, I got the feeling she's going to be a power woman and we're going to just be inspired by her. And then at the end of the month, I got a brand new person coming on, David Mitroff. He is also a SBDC advisor. And I wanted somebody to come on and talk about marketing. We haven't done that in a while. I'm just calling it marketing. You know, I like talking about trends, what's working, what's not working, what's good to invest money in, what's not good to invest money. Just get a feel for what's happening out there. So that's what he's going to do. He's going to talk about what he's noticing with his clients, his SBDC clients, etc. Okay, so for today's Lori's Corner, today, and you will know who in a minute, but we have an accountant joining us to talk about the importance of double checking your numbers and keeping your QuickBooks file clean. But before we get in that conversation, I want to clear up a common misunderstanding that I see all the time. Some of you may know this, some of you may not. Let's see. You can tell me in the chat how many people knew this. So a lot of small business owners believe that once they hand their books or QuickBooks file, whatever it is, over to the tax preparer, the CPA, the enrolled agent like I am, that person becomes responsible for making sure all the numbers are accurate. Okay, you ready, guys? That's simply not true. Especially on what's called a compiled tax return, which is what most small businesses under $1 million actually receive. So here's the reality. On a compiled return, the tax preparer takes the information you provide and puts it onto the tax forms. They may ask questions if something looks obviously off. Side note, I wish they would more than they do these days, but they're not required to audit or verify every transaction in your QuickBooks. That's not their job on a compiled return. You, the business owner, are ultimately responsible for the accuracy of the data on your tax return. In fact, the law places that responsibility on you, not the person who prepares the return. This is why it's so important to periodically review your own books. Reconcile your accounts. Yes, guys, reconcile your accounts. Many people don't even know what that is and don't do it. You must make sure your QuickBooks is accurate. And I'm using QuickBooks because a lot of people use QuickBooks. I'm saying this whether you use an Excel document, doesn't matter. You have to make sure it's accurate before you send it to the tax pro. Many of you just grab the documents and send it. You don't even look at it. A clean file helps your preparer do their job better and helps protect you. So today's guest is going to talk more about practical ways to double check and audit your own QuickBooks file so you can feel confident in the numbers you're handing over. Here's the bottom line, guys. Your tax preparer is there to prepare the return based on what you give them, not to act as your internal auditor. The more accurate and organized your records are, the smoother and safer tax time becomes. Got this. Keep those books clean. All right, let's jump into today's show. Okay, I am really excited to welcome back and forever back, Dalia Fogenay. She is an accountant dedicated to empowering business through effective financial management. As the founder of DF Accounting Services, she has been instrumental in helping numerous clients streamline their operations, improve their financial health, and grow their businesses. With strong commitment to ethical practices and continuous improvement, Dalia is known for her ability to simplify complex financial concepts and tailor strategies to clients' unique needs. Outside of crunching numbers, she's an avid learner, always stays updated with the latest trends in accounting industry, and a passionate mentor for fellow entrepreneurs. Dalia, welcome back. And always forever guest. You're going to be the forever guest. I feel like everybody knows you by now, but we have a lot of new people that keep coming in. So give us just a little bit of background. And also, I want to start out emphasizing from the beginning. And I'm going to use the word how you work with your clients. It's not just what you do, but it's how you do it. That to me, and I can speak from knowing a lot of people in this industry, is extraordinary. It's not like the kind of service that most people get at all. They get a bookkeeper that's just working with the numbers and don't even pay attention. You're well beyond that. And that comes from your background, your education, and who you are as a person. It's those three things together. Okay, I just did another intro for you, but let me let you take over from there. Tell us a little bit about you.
Yes, I've been in this industry for a long time, over 12 years. I stopped losing count after 12, so I always say over 12 years. Um, Pretty much, I had experience working in the accounting industry before going into business for several years until I felt confident enough to go into business. I really was noticing when I was working with all these businesses that one of the hardest thing that they would have to go through is finding a good accountant. Constantly seeing CFOs quit. Like I seen several CFO walk out like on the job and be stressed out. And I never really understood that. I also will be super close to the CEO and just experiencing what they had to go through just to like find new accountants. I realized I wanted to go into the business just because I wanted to be a reliable accountant for the CFO, for business owners, sorry. So I ventured out to being in business, and I've been in business for 5 years, I think, or more. I forgot. But I've been in business for a very long time now, since 2021.
Okay.
So I think I just hit my 5 year in July. So ever since then, I've been focusing on the small business owners just because if you're a small business owner, you probably can't afford a bookkeeper or accountant for 150,000 a year. So I am in business to help small business owners still have their accounting in order, their financial reporting in order. And I'm really passionate about educating the business owner of the importance of having their financial reporting up to date and being in the know of their numbers. A lot of business owners start off with being afraid to even know the actual numbers, or they'll tell me, I just had a conversation with someone yesterday and I told, because they had stopped our services just because of a buyout. They had to buy out their partner, so they no longer could afford me. But they came back to me and they told me, I asked them, like, how much do you think you made last year? And they're like, I have no idea. And that was so scary because this is $1 million company. I was like,
Wow, wow.
oh,
You know what's interesting? Something that struck me as you were talking that I never thought about, but as you mentioned when you were first experiencing with the accounting firms, the CFOs walking out, as in my private company doing turnarounds as the CFO, that is so true. I would go through so many different accountants and CPAs and stuff until I found the right one that eventually it was my team I took in. And
yeah.
if you don't have somebody that's good as a bookkeeper, somebody that's good as a tax person, you as a CFO are left blind. Now, with the small companies, this is even more true because you don't have the level of sophistication, but they tend to just come to the, okay, I'm hiring this person and not even think about whether they're getting what they need to get, whether they're getting the support. They seem to not put much thought into the type of services. They almost look at hiring them like a necessary evil, if I can use that expression, that you just accept whoever you hired and you don't even look to the way that they are servicing you or if you're learning from them. That's the key, learning from them, right?
Yeah.
And what I want to introduce to the audience, and you can comment because this is how you work with the clients, you teach your client, whether you mean to or not, by default, you are always teaching the clients how to look at their numbers. You're talking with them about profitability. You're explaining, you're alerting them to things. I don't know, and that's why I say very unique. I don't know anyone else that invests in teaching. They look at it more like a data entry performance
Mm.
for their clients. And I think talking about how you teach and what you ask the clients to look at is a great way for us to segue into the auditing section. So let's first just talk about what kind of conversations that you have with your small companies.
Yes. So most of the time I am receiving like I am bringing on new clients that have worked with bookkeepers previously or have worked with no bookkeepers previously. So in the ideal world, I want to work with anyone from the beginning just so we don't run into these hiccups. But for example, when I take on a client that has worked with previous bookkeepers on our intake call, they're already blown away because I'm asking them so many questions. I like to say 21 questions. I miss 21. I prepare them. I'm going to ask you over 21 questions. Sometimes it's not 21 questions, but I just want them to know, like, I know I gave you a 15-minute intake call, but it may take longer because I need you to understand like how important this is for you to tell me all the accounts that you have, not just tell me your checking and your savings. You may have line of credits and that may impact your financials. We want to make sure we are separating the principal with the interest because then if you allocate everything to the profit and loss, you're taking more expenses than you should. You already are lying on your tax return, right? Because a lot of
Yep,
people tend to write off the whole loan
yep,
payment as an expense or just different things like the whole car payment as an expense, and it doesn't really work like that. So I will educate them on the call and let them know, hey, this is what you're going to expect from me. If I'm the type of person that I'm going to educate you throughout the way, I'm not only just going to do the work and just be the silent person that sends you a profit and loss statement. I'm going to educate you because I need you to know the importance. Because I think business owners don't think so far ahead. They don't think a lot of these business owners have great businesses, and a lot of them don't even think about the possibility of potentially selling their business in the future. So, as me, my job is to implement that in their life. Like, hey, by the way, it's so important for you to have accurate financial reporting. So, one day when you're ready to retire, you can sell your business. And a lot of them are like, wait, I could sell this business? Absolutely. Like, do you know the power of being a business owner and having so many clients? If someone wants to have the same business as you, they don't have to pay for advertising. You already have a number of clients. That is what they're buying your business. And it kind of, teaches them, oh, wow, this is why I need to have great financial reporting, right? Because when someone's buying a business, selling your business is not easy because they're auditing everything, all the histories. They're making sure that you're not forcing no numbers, that nothing looks very interesting. So I educate because I make them think more than just right now, more than just thinking about your taxes. I'm thinking about the future of your business and making sure that your business stays open long term, not just short term.
You know, you're so correct on that. I have for years audited for both the sellers and the buyers. I've been on both sides. It's really interesting because I know how to look at it because even with business brokers, I know what they're doing to the financials to make it look better. And so I get a good amount, way more than I ever did after COVID, by the way, of clients coming through the SBDC, either wanting to sell or buy their company. And right away, you have to go back and look at their financials. And if their financials haven't been intact, they have to do a lot of cleanup because of that. So totally correct on that. I want to go back to something you mentioned about the interest and the car payment. And I'm going to throw in the merchant cash advances, the loans. I call them payday loans because that's what I feel like they are. But what I want to express and have the audience understand is it used to be in the olden days, I'm old, so I can talk olden days, right? That preparing bookkeeping, data entry was not as complicated as it is today. And Dalia, I feel like even in the last 5 years with these merchant cash advance and then Cal Savers and all this stuff that everybody is being exposed to, bookkeeping needs journal entries. It's not just straight download from the bank account, choose the categories, which I hear the clients, they're like, oh, I set up my QuickBooks. I chose the categories. Now it's downloading. Everything's fine. Delia, they really don't even realize that there are tweaks, we'll call it that, just for people to understand the term, but journal entries that have to be done to reconcile, which you're much more better than me understanding this because I don't get the technology at QuickBooks anymore. I haven't stayed up with it. But credit card transactions have to be reconciled. So everybody's using a credit card, even if they don't have a merchant cash advance. So we're once again setting up the stage for this need to audit. Talk about some of the situations that need journal entries that is not just a clean dump into the QuickBooks files from the bank account.
Yeah, so for example, now there's so many different ways of borrowing money, so many different ways. And a lot of times, along with more opportunities of borrowing money, there's a lot of new methods on how they collect their money. So what I am coming to understand is that, for example, Square or Stripe, rather than your gross profit being shown on the profit and loss under income, what it's reflecting is your net income. What that does to your business, it makes your business look like it's bringing in less money than it actually is. So, for example, you want to show your profit and loss is a summary of what your business is able to bring in and how well it's doing. So, if you know you're bringing in $80,000, but in your income, it's showing that you're only bringing $75,000, you are showing your business short. Like you're shortening your business by saying, hey, we're a $75,000 business instead of an $8,000 business. Now, how it needs to look ideally is gross income needs to look 80,000, merchant fees, let's say 5,000. And then eventually you get that $5,000 write-off. It prepares you to understand, wow, I'm paying $5,000 on fees to use this processing software, right? But now back to the loans. So let's say that purchasing software offers you an opportunity to take out a loan with them. Let's say Square, because I see this all the time.
Yep.
What Square offers this thing where instead of taking a monthly amount out of your account every month, it says, hey, based on whatever we have collected from Square transactions, we will only deposit the difference to you. So we'll take our fee, our extra fee for you paying back our loan, and then we'll deposit the rest. Well, what does that do? Not only originally you were already showing your net income. Now you're showing less income because you're not in your financial reporting, you're not showing that, hey, I collected, let's say I collected $1,000, but out of that $1,000, 100 went to merchant fees, and then 300 went to paying back the loan. It doesn't reflect like that. So you cannot just rely on any bookkeeper just to be categorizing all your expenses and saying, okay, this is income. No, that's not just income. That's a breakdown of where you need to now create a split. I like to call them splits because I'm familiar with QuickBooks Online. So when I see $1,000 deposit being made, let's say I see $800 deposit being made on QuickBooks. I know it's not just $800. I know that was a $1,000 sale. So now I need to make an adjustment and say, my client collected $1,000. They charged their client $1,000. Out of that $1,000, 300 went into a loan. Now I'm making that 300 hit the loan account. And then they were charged $100 for merchant fees, right? I'm just throwing these easy numbers.
Yep.
And
Yep.
then you're left with a breakdown of everything, right? Why did they deposit this amount of money? So now I'm showing the real numbers and I'm allocating all the money to the right place. Because if you get audited and you just say, hey, I showed that I brought in $800, and when you receive a 1099-K from
Yep. I was just going to talk about that.
From the merchant processing, you're
Yep.
showing that you only have a gross receipts of 80,000, but then they're saying, no, we collected 100,000 on your behalf. Then your tax person is saying, why are you showing less income than the processing software is saying that they have collected on your behalf? So what that can lead up to, if you're working with a really good like accountant, like CPA tax person, they may tell you, I'm not accepting these books. I need you to work with a good bookkeeper, or I need you to like, this doesn't look well. I don't think I want to take this on, because that's what's happening now too. CPAs and tax people, they want to feel comfortable with your balance sheet and your profit and loss. If you're working with someone good, if you're working with someone like a regular, not even trying to downplay some of these companies, but like an H&R person who just got certified, they're never going to question your profit and loss. They're never going to question your balance sheet. That is scary. Like when someone doesn't question your balance sheet when they should be questioning your balance sheet or your profit and loss, that is a scary place to be, because they're not even trying to protect you against an audit.
Yep,
So
it's
those
very
are the
true.
things.
Yep.
Yeah.
And I want to tie in a few things on what you said, because guys, this is so important. You know, the 1099-K, and this is my concern. I haven't seen a lot of experiences with IRS, with like the small client base through the SBDC getting audited on this, but I know it's only a matter of time, because the merchant card or any kind of payment system like Venmo, etc., they're going to be required to send the 1099-Ks. Now, granted, it went back up to 20,000. It was getting as low as 600, it was going to go. But what basically happens is the IRS is seeing that total revenue before the deduction, different from what's going in your bank account. Then I see the tax person not even knowing you have the merchant card, because they're not seeing anything other than the bank account. They're not asking for anything else. So it slips by the tax person completely unknown. The bookkeeper might see it because they're seeing the actual line item from the bank saying merchant card, but the tax person's just seeing a total. They can't even suspect that you don't have the revenue stated correctly. And one thing I have noticed about the IRS is that 1099s are those things that they audit. 1099 in any way is one of those red flags, because the computer systems are just set up and check it. So these are just such red flags. And what I always tell people, people ask me, what causes an audit from the IRS, et cetera. And you can't really say yes or no on this. But what I have noticed from my own experience, and it is that when some of the typical forms are always filed, the 1099s, the W-2 payroll forms, et cetera, when they don't line up is what triggers the IRS audits. It's not so much people get all upset. Are they going to look at whether my marketing is too high or my expenses are too high? No, it's these forms, these standard forms that can be checked easily with a computer. And I also want to comment on something you said about good CPAs will look at this and say, I'm not doing your tax returns. I don't trust this. I had somebody just yesterday that came through the SBDC. I don't even know the whole story, but whether they're doing their own payroll or QuickBooks is doing whatever, they want a bookkeeper or a tax person to just file for them 940 and 941. And they don't, yeah, right, exactly. I was explaining to them, I go, no, no, no. This is a compiled document from your wages. Nobody's just going to file this and say, hey, this is the number. And so I think that once again, I give a little blame, although we have to be responsible for our own actions. I give a little blame to what small companies are hearing from service providers. Just do this, download, it's going to be fine. We'll handle your payroll. We do payroll. It's making them believe an untrue statement that these documents don't matter. But it's not the person who's selling you these services that's going to get in trouble. It's you. And I see a lot of craziness happening with W-2s and forms and everything across the board. And small businesses are getting legal letters so much now. I'm becoming an expert in legal letters because of that. Now, can you also, and this is where I'm going to give you the words because I don't even fully, because I don't do QuickBooks on a daily basis like you do. Talk about credit cards, because I know that there's something, and you and I have talked about it before. I've sent you clients for you to fix it, where they get this weird thing on the balance sheet. I pick up everything on the balance sheet. I don't know the technology behind it necessarily, but I'm like, Dalia, this balance sheet's ugly. Something's not reconciling with the credit card. It's a negative number, like they overpaid. And you know what's going on. And I would like to mention that for a bit, because even if somebody doesn't have a merchant cash advance or they don't have Cal Savers, everybody's got a credit card situation and they don't realize the need to audit. And I don't know about you on brand new clients you're seeing that have QuickBooks file. I'm seeing it wrong on almost everyone I see. So something's going on here. Can we talk about the credit card, the account journals, what's going on so people can understand?
Yeah, so I believe like a lot of people are under the impression that, hey, as long as I'm categorizing it into the right category, then it should be fine. It should be hitting the balance sheet or it should be hitting the profit and loss statement correctly. And that's not necessary too. So for example, I was dealing with a client yesterday, and what I noticed, I was going over their balance sheet. A lot of people think they're just going to meet with me profit and loss, and I'm like, surprise, we're going to go over the balance sheet. Like, they're like, okay, I'm like very overwhelmed. Like, what is the balance sheet actually trying to teach me? So I'm walking them through them, and I said, so technically the balance sheet is a place where all your liabilities and your fixed assets, these numbers need to match up, right? So pretty much I tell them, hey, anything that is under liabilities means loans you owe, credit cards you owe, anything you owe, right? And I tell them these numbers reflect on the last balance as of the day that I ran the report. So if I'm running the report up to May 31st, I need to see that your loan statement reflects the same balance on here. And they're like, oh, okay. So then we go to like a credit card and a loan. And I tell them, didn't you tell me this loan is paid off? And they'll say, yes, loan is actually paid off. I said, well, according to the balance sheet, it's showing negative 14,000. And they're like, what does that mean? That means that you overpaid this loan $14,000. And they're like, what? Like, why does it look like that? I've been categorizing it correctly. So I go into it and I explain to them, well, it seems like you've been hitting the whole payment into this account, into the balance sheet, into the chart of account. Right. Technically, you need to break it up. You need to put whatever's principal and then whatever is interest goes to the profit and loss. And then I tell them, but even so, the numbers are not adding up to me. And I said, how did you pay off this loan? Because I already know the story. I know what everyone does sometimes. Well, we refinanced this loan and we refinanced, and the new company that we refinanced, they took care of it in their back end, and that company paid them off. I said, well, obviously we're not going to see that in your bank statements because you never actually paid them off. We're always going to see that there's a balance left on your end because the last balance you had, let's say it was 4,000, and then the refinance company is the one who paid them personally, so you never paid it off. So now we need to do a journal entry where we move that 4,000 over to the new loan company. And they were just like, wow, I never thought about it like that. So I always tell people, not only that, I wanted to also highlight what I am noticing is that when things are not getting categorized correctly, sometimes your financial reports may even show that you don't even have a loan. And that's a scary place to be, because let's say you're doing one of these Stripe loans and then they're Stripe or Square and they're taking out, you're never going to actually see a payment to a loan company. You're just going to see like, hey, they only deposited this amount. Now, if you're not showing that you have a loan on your balance sheet, let's say you're getting ready to sell your business and you want to negotiate for them to pay off your loan, that all your debt that you owe, where they're going to look at your financials and say, by the way, you don't have no debt. Like, you don't owe no credit cards. You don't owe no loans, right? Well, this happens with the loan aspect of it the most, right? And that's where the problem happens. The same thing happens with the credit cards. Let's say you had a $10,000 balance and then you had another 20,000, and then you work something out with Chase and they said, hey, we are going to consolidate all your debt into one card. We'll take care of paying off Bank of America and we're going to move all your debt into our loan, right? How do you see that? You have to make sure you're making the accurate journal entries to show all this debt was moved to this new loan, and just show the audit trails, just show the audits. But you constantly have to be in communication with the person who's handling your accounts. And, or if you're doing it yourself, you have to make the proper journal entries. So I just really wanted to highlight that too, just because a lot of people don't understand that. And not only that, unfortunately, AI is a gift, and then it's also like, we don't know how to feel about AI. With AI moving more aggressively and being more smarter and doing things and people transitioning to it, the IRS is transitioning to AI. So rather than like the normal person finding an error and like looking at your return and saying something about this return looks off, I want everyone to start being prepared that eventually they're going to incorporate, if not already, a lot of us think they're already incorporating this. They have AIs overseeing people's return, and if they find like something that looks fishy, that will cause an alert in the system. That is a scary place to be, because that means more people will be experiencing audits from the years to come. So just want to—
It's so true. Yeah, I love what you're bringing up. And, being an enrolled agent certified by the U.S. Treasury, I like to say I'm in constant communication with the IRS, because literally I'll get 6-7 emails a day having to be informed of everything. And you're absolutely right that more are being checked with AI. And so that means they're going to pick up things, because they pick up trends and differences, tying back to what I said about these reports. There's a couple other things that I wanted to highlight that you mentioned, all great information. When you were talking about the transaction of the loan being paid off and the credit card being paid off, I want to get people to understand that bookkeeping transactions need to be, we call it an audit trail, but I'm going to use just slang, tell a story of all the transactions. It's not just the number at the end. It's the entry of, okay, then this happened, then you sold this, then you paid off this. That's what transactions are supposed to happen. And that's why at the end of the day, the balance sheet has got to add up and show what actually occurred. So there's a lot behind these transactions that they don't realize. Going back to your story about if you want to sell the company and it doesn't show you have a loan, I got a real life scary example on that, but it wasn't that they wanted to sell the company. They had taken out a lot of these merchant cash advances, a lot. They were trying to get a company, a finance company, to refinance these, consolidate that debt, and make it easier to pay. So they were going through somebody who was getting, to a conversation about possibly lending them some money. But then they came to me because they got denied. Delia, they got denied because the financial statements nor the tax returns showed they had any borrowed money. They had submitted the documents from the merchant company, but when they look at the tax return and they looked at the financial statements, it showed no fee. So they said, you don't have these loans. And they were like, why are they saying that? And I go, because you didn't put it in your financials. These loans don't exist. And of course, they didn't get the interest off. So that is a real live example on that. And one last thing I got to tell you that's kind of funny. When you were telling people about the balance sheet, I always say that if there is only, now I would never do this, but if I had to do a merger or sell, buy, or even a financial analysis for an investment bank like I've done, and I was told I could only look at one sheet only, that's it, right? Like this new rule, people think you look at the profit and loss. No, I'm going to look at the balance sheet. That's the first thing I always ask for. And that's the thing that nobody looks at. And when I was teaching as a professor in undergrad, I was trying to get the students to understand a balance sheet. I had a hard time until I explained it this way. So I explained to them first that the profit and loss starts over zero every year in January, right? And the balance sheet is called the scorecard because it keeps the running history. And one day, like they were looking at me and they weren't paying attention. And I said to them, and this is just so fun, but it's so true. I go, okay, look, guys, let's look at this a new way. Okay. Now, you know the statement that everything that happens in Las Vegas stays in Las Vegas? Well, Las Vegas is your profit and loss, and the internet is the balance sheet.
Yes. Yes.
And they were like, oh, I get it. You can always trace everything back in the internet. I go, oh, yeah. And so that's the way I describe it now. I thought you would laugh at that.
I like that.
But, once again, guys, what we're doing is we're building on an understanding of the complexity of the accounting beyond what QuickBooks is selling you. So now, Dalia, if we got somebody that's using QuickBooks and you were just to have a walk away, even just one report or two report, wherever you want to go with this, something that people should do on a monthly, daily, I don't know, weekly, quarterly, whatever, what can everybody at least walk away from this call? Of course, I say print out the balance sheet, but tell us what can they do to start doing at least an internal audit, even if they have a bookkeeper, just to check things.
I'm really advising a lot of people, especially now, just because there is a handful, I'm saying more than 70% of people who are retiring in our industry, unfortunately. So that
okay, like the providers are retiring, the CPAs are retiring, the bookkeeper. You're absolutely correct about that. There is. I don't know why that is, but there is. You're right. Okay, I just wanted everybody in the audience to understand who was retiring, the people who have serviced you. Go ahead.
So I want to for sure start with that. With that being said, you may be thinking, well, how does that really affect me? I never worked with an accountant or bookkeeper. The reason why that can affect you is that the people who are providing, so I'm the younger generation, you can call me the younger generation, although I'm in my 30s, but regardless, we are considered like the new people who are going to retire in this industry later on in life, right? But when you have a handful of 70% of accountants retiring, bookkeepers retiring, what does that mean to the people who are in this industry? Well, that means an overflow of clients. That means a high demand for us people. Like my tax partner, he has a huge demand in taxes because the tax people are retiring a lot. A lot of them are retiring, and their children don't want to take over their accounting firms, and they have successful accounting firms. Like even with me, I have 3 children. None of them want to be in the accounting industry, right? Which I respect that, right? That's not their passion. So what that means to you is maybe you may get to a point where you are ready for an accountant. Well, one, that means you now have to worry about, is that accountant even available to take on more clients? Not only that, I want to expose everyone to, even if you're not in the mindset of working with a bookkeeper or accountant or a CFO or a CPA or a tax person, the way you can audit in a way that you can have peace of mind is working with these accounting firms or like someone like myself, where I offer a service where I will audit. I'll do like a minor audit. I will review your bookkeeping. I will review I only deal with QuickBooks Online. I will review your accounting software and highlight things to you like, hey, this doesn't look right. you call me and ask me questions like, Dahlia, I have these questions and concerns. If you are at least getting in the habit and the practice of communicating with someone to oversee your stuff, not necessarily work with them on a monthly basis because your business is not in a position to hire someone yet, at least have someone you can consult to. Hey, Dahlia, what do you see on my profit and loss statement that may cause an audit or doesn't look right? What do you see on my balance sheet that doesn't look right? Dahlia, matter of fact, I'm about to take on a loan. Can I book a call with you? And can I hire you for an hour or two so you can help me set all these things up? I promise you, just doing that will save you so much headache in the future, right? Not
Will,
only,
I love it. I gotta say, it's like safe DIY. You know what I mean? It's
yeah,
DIY with an education, a learning, and a check. And I love that because it's a way for someone that says, hey, I don't have the money to go full on to get help, but I'm out here on my own. And that's the only two choices people have. So what you're talking about is a buying of an hour time to be able to have a second opinion and advice and learning opportunity rather than watching a video and trying to figure out where it applies. This is specific. This is what I do with my private business and CFO. Hire me an hour and we'll talk about it. I love it. I just
yeah.
want to make sure the audience understood we're talking about the ability to get a unit of time for consultation to still DIY. Please continue.
Yes, it kind of look at it in a way where you can't afford to have a lawyer and retainer, but it's good to have a lawyer that you can hire for an hour just to have a conversation about business or potential business you're going to conduct or to review a contract, right? The same thing with an accountant, a bookkeeper who is offering this service, because a lot of them are not, just because a lot of people in our industry don't tend to like being very educational. They like to
Right.
just do things behind the screen, categorize things,
Yeah.
reconcile things, and then move on. But also, if you're working with a bookkeeper currently and you just every time they turn in a profit and loss statement to you, or every time you go to taxes, you feel like, hey, I don't feel like I should be paying this much in taxes. I don't feel like the numbers are accurate. Get a second opinion. Reach out to someone and say, hey, I want to know if this bookkeeper is actually like accounting for everything. I just dealt with a client yesterday where I realized that the bookkeeper they were working with was forcing reconciliation. So there was over
Uh,
$4,000 of transactions missing on the
okay.
bank statement
Yeah.
that QuickBooks probably didn't pick up or the transactions didn't transfer over to QuickBooks. So rather than them manually entering the missing transactions on the bank statement, they actually forced the missing number of 3,000. How does that affect you?
Big time.
Big time. It affects you because if those $3,000 transactions are not categorized to gasoline, to contract labor, to legal and professional fees, how do you get to write off those $3,000? It's not even hitting the profit and loss statement. Not only that, let's say it is hitting the profit and loss statement and they love to put in this uncategorized expense. Well,
Oh, ask an accountant.
that's going to affect your tax person because your tax person is going to say, there's no such thing on the tax return. Ask my accountant. I need to know what those $3,000 are of expense are for. So I'm seeing a lot of this where a lot of people are providing bookkeeping services or QuickBooks. I always leave this in mind with people because I tend to get clients also who have worked with QuickBooks Online where they have their own professionals. They hire their own professionals to do your bookkeeping for you. Um, and what I notice is that when they transition from hiring these softwares that say, hey, we'll do your bookkeeping for way cheaper, right? And then
Yeah.
compared to like working with someone who has their own practice, I notice that a lot of those people don't even ask all the questions. You have to understand that one employee of QuickBooks is working with 30, 40 other accounts. And the reason why I know is because I have a lot of friends in my industry who had gotten a part-time job with QuickBooks just to see how
Yeah.
it is. And they don't even have the time to ask you all the proper questions. So that's
Or
a
the
scary
knowledge a
place.
lot. Or the knowledge a lot. Or
Yeah,
the knowledge.
they don't go up and beyond. Like for them, it's like we got hired to focus on your profit and loss. We did not get hired on focusing on your balance sheet, and that's a scary place to be.
Yeah. I want to bring in everything you said because it's so important. And really, guys, what I'm trying to stress with this is a wake up call that when you communicate, whether you're doing it yourself or communicating with somebody else to do your bookkeeping, your taxes, you have to retain the power. You can't just turn it over blindly and trust and think this is what I do, they're going to do it correctly. With you talking about a lot of the professionals that have done taxes as well as bookkeeping, retiring, you're very correct. I think the expression, you guys can correct me if I'm wrong, I think it's brain trust. I think that's the expression. We're losing a lot of brain trust with the retiring. And newer generation, many of the, especially the bookkeepers, and I'm sorry, but a lot of the QuickBooks certified ones are technology trained, not trained in accounting transactions. I had an older CPA, he's probably in his 70s, say to me, I've lost respect for my profession. I thought it was the most interesting thing to say. I said, what are you talking about? He says, I'm seeing CPAs filing wrong forms, not knowing somebody's taxes in an S Corp. I'm seeing them not taking reasonable salaries. And what it tells me is this transition from QuickBooks saying just download your data and everything be perfect has turned into what I call like a cattle get herding cattle in even all the way up to the tax returns. They're just putting in the numbers because they can, like I said at the very beginning. So nobody's watching until the IRS and the AI pick up, and that's who is. So you really have to be at least aware enough to look at the balance sheet and question what's on the balance sheet and question if there are any negative numbers. And what's interesting, you talked about forced forced reconciliation. Of course, coming from the CFO land, I never even would think you could force a technology to do that because I'm used to the bigger ones, the Patriot side, right? And there was this thing I was looking at. I look at the balance sheet. I couldn't figure out what in the world was going on with these weird, and to me, not understanding somebody would do that. To me, it seemed like there was hanging transactions, like they didn't quite get completed right. And I finally found, I said to the client, they were doing their own QuickBooks. Well, how did you reconcile? Oh, I had QuickBooks override it and force it. And they don't realize that it sounds like the problem goes away, but it really doesn't. And I also had a really weird experience where a company was trying to get a lower fee for their bookkeeping, and they contacted this company and said they would do it for this amount, very low amount. But they told them, and it took a while to figure out what was going on. They told them they had to use this extra service. They had to pay for this extra service. And I looked at it, and the service was an AI auditing service to see if the numbers are correct. I said, this is even further from the actual auditing by a human. And I'm a big proponent of AI. Don't get me wrong. I'm not a
Yeah, I like AI. Yeah.
But the fact is AI can't do everything. And like actually Michael Miller said this on an interview one time, you got to keep the human in the loop. And there are things, and especially accounting, you have to keep the human loop. And so I thought, okay, now you've got QuickBooks downloading, not checking. And now you got this other system not checking. They're charging cheap because they're not doing anything. And
I was going to say, can we talk about that a little bit more? Just because right now people are getting like a flood of these advertisements in their timelines wherever platform they're at, right? One, I want to highlight the AI aspect of these accounting firms.
yes.
Keep in mind, AI is not smart enough, and I'm running into this hiccup where AI is not smart enough to understand. So let's say you connect a credit card to the accounting software. AI is not smart enough to pick up, oh, by the way, this credit card, there's the main credit card and there's the employee credit cards where the master credit card, yes, the master credit card, maybe the business owner has the master credit card. All those transactions are going into the accounting software. But when the employee or the husband or the business partner is using the other credit cards, those transactions are not transferring over. AI is not smart enough to pick up, oh, this credit card there's a master credit card and there's sub credit cards towards this master. AI is only going to pick up whatever the main credit card is. So now as an accountant or the person doing the books, it can be a business owner, you have to manually enter the expenses that the employee use for gasoline or whatever. So I've noticed that the reason why when people have transitioned from letting AI kind of tell them everything and letting them know like these are all the expenses, and they're like, I still can't reconcile. Why can't I reconcile? And I said, when you're reconciling, there needs to be a statement next to you, like up, so you can
Okay.
review
Yeah.
every transaction and calculate, oh, well, I noticed that the accounting software didn't pick up these transactions. Why didn't it pick it up, right? This is why AI cannot be humanized, right? Because even though AI can have the statement uploaded to the accounting software, it's still not realizing why are these transactions missing. Then let's talk about the advertising of people who do have accounting firms and say, we can do your bookkeeping as low as this, and it'd be a crazy low number. Let's say $39 a month or something.
Yeah.
Be prepared. And I'm in this industry. I've been in this industry far too long, and I help a lot of other accounting firms with their clients. If they are offering you services for that low, be prepared that someone in a different country is exposed to your financial statements. And that's a scary place to be. And be prepared that the person who is doing marketing at a large scale, they're not even overseeing what their employees are doing. So I want to prepare a lot of people, because a lot of accounting firms that did take this approach and hire people overseas, now they're firing the people overseas, because what they did was say, Dalia, the reputation of my accounting firm is going down. They're not happy with the type of work, of bookkeeping work that we're producing. Can I hire you to see if the bookkeepers I have hired are doing their job? And I kid you, not even 9 out of 10, 10 out of 10 times that I have done this for accounting firms, the people who they have hired didn't even reconcile the account for 2 years. All they were doing was just categorizing. That's a
Yeah.
scary place to be. So I just want
Yeah.
to expose everyone to that, Lori, just because I know people are gonna be seeing this online, and they're gonna think it's a great deal for them, and that's scary too.
It really is. And here's the positioning I'm going to come from on that. And Delia, I'm glad you're bringing it up, because I think that what we try to do on the show is make people smart, wise, and increase their wisdom. So you ready for how I'm going to respond to what you're saying? You're absolutely correct. I'm going to put a new angle on it. And I'm going to go on my background of finance, tax, and legal structures, right? Legal structures, legal documents. So this is where I'm going to start. I'm going to start with just a couple acronyms. You ready? And they're going to start out with the least scary. This, guys, you're going to love this. The least scary. Just 3 letters. I got 3 letters. That's all. The very first is the least scary. IRS. The second one gets a little scarier. FTB. Franchise Tax Board. The third one scares me to death. EDD. Okay, these are California. You know what I'm talking about. I have dealt with these agencies with my clients who are getting legal letters, and believe me, it is not fun. The California ones are scarier than IRS. I've dealt with all of these, right? They're scarier than the IRS. What I'm seeing is a predominance like I have never, ever in my entire life seen before, of our audience, our small companies getting legal letters from these institutions every single day. I bet you during a week of consulting with the SBDC, I'm dealing with 5 to 6 clients getting a letter from one of these 3.
Wow.
Now, it's because they're doing their own, or a bookkeeper's even doing it. Lots of time bookkeepers are doing it. Lots of time they even have tax people, and they don't understand that all of these transactions we're talking about matters, because it's going to end up on a report. You got EDD, you got situations with W-2 versus independent contractors, you got franchise tax board dealing with the revenue, form 568 not being filed properly. You've got also a situation with the sales tax not being filed properly. And I've seen it where franchise tax board audits off the sales tax audit and finds out your revenue wasn't reported properly because you used merchant tax, and then you get a fine for not for under reporting your revenue. It's scary stuff. And where I'm going with it is, I have just never seen from my early days of life in farmers markets with my family being farmers, small companies exposed to this type of stuff. So going in with so what I'm saying with my first sentence, guys, it matters. It really matters. It's not just about the bookkeeper. It's about you getting personally in trouble for this. Now, AI, what I've learned with working with AI is it uses this concept. I could have a whole show on this. I know I'm going to make people interested in it, but I've done a lot of research. I use it for a lot of things, but I also educated myself on how AI is programmed. And it uses something called next token probability. And it looks for what's the next probable word based on all these human interactions. It may go on blogs, it may go on YouTube, it may go on publications, especially if you don't direct it. You know, if you don't direct it, you may not be on an IRS publication. You may be on a YouTube with someone who thinks they get the greatest hack, and that's coming up as information. Your statement about having the statements in front of you and starting to put it all together to the story. Okay, this is the deal. Humans are crazy, chaotic, and do things that AI can't predict. Oh, I got this credit card and then I have this one over here and it ties over to here and I use this for here. Not even that it's wrong, it's the business sense. And when you have a corporate business card, it always breaks it down to the corporate card and the credit card. So you got two accounts you got to reconcile, right? It's just a given. So when you're using AI and it's using the statistical probability and it's going through the data and it's comparing data, it can't think like the accounting world and what you set up. It doesn't realize, well, this credit card is attached to this and this one's for here. We also have an employee. This comes in here. But when a human, once again, the brain trust of the people who are retiring, looks at the statements, you start putting together the story. My whole life in auditing as a CFO is putting together the story by getting the original data and starting piecemeal it together. And so a lot of people, what they do is they look for rock bottom. This is my ending on this, Dalia. They look for rock bottom prices to get the cheapest they can because they don't really see that it's that important and how much they're benefiting by at least not being harmed by having accurate documents. They see the marketing, they'll put money in marketing in a second because they tie that into the need to get revenue. But they think that since the bookkeeping, they don't feel, they don't touch it, they don't live with it, they don't experience it until they get an audit. They just don't think it benefits them. So they're like, oh, I hate it anyway. Let me not put money into it. When it is the lifeline of you and the company. And so I don't know if I addressed it to the degree that you thought I was going to, but you really like the question. You get what you paid for in this situation. You really do get what you paid for.
And just to finish off of what you just said, here's like more components to what you just said. Keep in mind that the AI software doesn't have the mind of a brain, like of a real brain of a human being. So for example, AI might say, well, this expense must go into meals. It looks like it's a restaurant, it's going into meals. But the human brain of a bookkeeper, like you said, will look at the history of this company and say, yes, this was a meal, this was a restaurant expense, but this is also a nonprofit. They offer programs. I need to allocate it to the right event and the right program and the right category because the way that this nonprofit functions is that they get grants by different funders, by different grants, and then they have to follow a contract. Now I need to make sure that the contract gave them a balance of $1,000 to spend on an event food. I need to make sure that I'm categorizing it to that program event food. I'm not just coding it to meals. Meals is not broad. It doesn't let me know what event the meal was for. It just lets me know they spend it on meals. So AI does not have the capacity to even think far ahead of, let me review the contract and see, let me allocate it, because there can be 3 different meal expense categories, right?
I'll take one even on your example and take it and hit home. Even somebody can relate. AI isn't going to look at that meal and notice that every month the company has staff meetings. And so that meal is technically an office expense and can be deductible in a different way than a client expense with only 50%. There's another thing with meals.
That's a really good
look
one.
at that. Yeah.
Yes. Because there are offices like
Yep.
there's IT people where IT people, I always say like they get it so good because if they work for a big corporate company, that company makes it their
Yep.
responsibility that they store the whole office with snacks and goods
Exactly.
and because these people are on their computer all day. So
Right.
for them to get up and get a refreshment, that is considered something different. It's not
Yes.
meals. It's not meals with clients. It's refreshments for the office, and there's different tax codes to it. And I know the tax law is changing. And then the last thing that I want to say that you said something that was really important about how to be afraid of and at what scale to be afraid.
Yep.
IRS,
Yep.
EDD, the franchise tax board. Keep in mind that they all communicate with each other.
Oh, they do. In fact, they've gotten better at it.
They
They've
got
gotten,
so better at it. So
yeah.
you may be getting an IRS notice, but then if the IRS also noticed that you lied on your payroll and that you didn't allocate certain taxes on your payroll and that you have employees, then now they're communicating with EDD. And if that previous employee wants to get do a EDD claim, and then they go to EDD and EDD's like, what are you talking about? We never receive any taxes of money being taken
So
out of
true.
your pay stub. You actually were like probably getting paid as a 1099. Then EDD now communicates to Cal OSHA, and now you have the Labor Commission Office knocking on your door doing an internal audit. So it's not always just the IRS
No,
doing
they
an
are.
audit.
They
It
are.
can be
Yeah.
different things, and now
Yeah.
you can have a bigger problem. So just
No.
want to say that.
That's so true. And I know we got to shut down. We're over, but I just have to add this one part. The other day, they got a franchise tax board notice, and I couldn't figure out where they got it because they hadn't filed their tax. They hadn't done anything. How did they get triggered? I know these systems so well. It was because they sold a few products on Amazon. Amazon collected the sales tax, put it into the cat. Yes, yes, the sales tax got triggered by franchise tax board. I was like, oh my God, CTFA is now communicating with franchise tax board. They saw sales tax, no revenue, no tax return, huge penalties all along. Yeah, I know we're on it, but can you believe that one? Like I said, I always tell people, people say, like, how do you know so much? I go, two reasons. One, I'm old, I've been around a long time. Two, I have been an SBDC advisor for 20 years, and you small business guys do things I never see anybody else do, and no other buddy at my private client would do. So I get to follow paper trails in mass amounts that nobody else on planet Earth does. Oh, I gotta tell you, okay, we're running over, we always do, but guys, I hope this has been educational, informational. All we're trying to do is say, be aware, wake up, know what's going on, understand the importance of these numbers. Don't be sold on its simplicity. That's going to be what I'm going to end. Don't be sold on simplicity. Tell your last thoughts.
Last thoughts, don't be afraid to reach out to us.
Yeah.
Even if you're not ready to hire a bookkeeper, an accountant, book a consultation call. Um, you can always reach out to me. Like I'm available. I offer consultation calls to review your profit and loss or just to guide you, even if you want someone to kind of help you set up your accounting software and constantly think of it like constantly renewing your training. Feel free to reach out. I want to make sure that small business owners, wherever you are, I'm going to meet you there. And that way you can have this peace of mind, especially with AI taking over. That means that IRS and all these other places are going to be in more communication and will be able to capture more red flags. So for me, I just want every business owner to enjoy bringing in their money and have kind of peace of mind of their accounting software and have a point of contact. And I am that person because I just want to make sure that everyone, if they cannot worry about their accounting, that will be a plus. And it's better. And one final thing, if you do see those companies are offering like accounting services for super cheap, it's better for you just to book a consultation call with someone who really does this in real life and that can educate you and you can reach out to them constantly and be the same point of contact, not, oh, you're talking to this person today, then you're talking to this person tomorrow. It's better for you to do that and pay that one-time fee or a quarterly fee than try to save you a couple $100 every single month, right?
I always say, and I'm so glad you're structuring your business to do more. It's better to get the information and do it yourself. Okay, we're way over. Sadie, got to bring you back into this. I know, guys, thanks for staying with us. It's always intense, but these are just things you need to know. Sadie's your head spinning.
Well, I mean, the passion is real, is all I can say. When the two of you get together, I'm just like, oh my God, like it can go on, but we learn so much, and that's why I love being on Small Biz Dog.
I know. So, guys, I have to say goodbye. Sadie's going to stay after. You're staying after class, Sadie, and in the chat. Dalia's information if you want to get in contact with me. Also, other advisors at the SBDC. Like Dalia said, we're here to help. Reach out to us. Make sure, but mostly, guys, you're the authority. You're in control. You have the power. Don't let anyone with more information than you have take that power. If you ask a question and they can explain it to you in a way that you can understand, find someone else. Own your power. Okay, I got to go. Thank you for watching Small Biz Talk with your host, Lori Williams. Thank you to Dalia for being here all the time, sharing the great information, and to Sadie for keeping us all together. And I will see you next week. Bye, everybody.
Bye, Lori. All righty, guys. Well, we know the drill if you're a frequent flyer over here. So I put Dalia's information in there, and then I put the SBDC's information in there just in case you are not a client yet. Let me put this link over here in case you want to catch previous shows. If you want to reach out to Lori, you never know, you might, be interested, or maybe you know someone who would be a good guest. So let me put contact information in there for Lori. Let me know if you need anything else. As always, no worry, Donzas. Like I said, I'm gonna hang out for a little bit. Let me know if you need anything specifically. But other than that, have an amazing rest of your day. We are gonna see you next week because this is the place to be on Wednesdays, folks. Alrighty, I'm gonna put myself on mute. Let me know if you need anything, okay? Oh, that's right. And I just launched the survey for you folks. Good call, Donza. All righty. My bad, Donza. I'm sorry. Okay, so survey is it also been launched.